This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, August 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn up 2.5, 490.5. September soybeans were up 10 at 12.10 and 3/4, and September Chicago wheat was up a half at 665. There were no, export sales announcements here this morning. Looking at yesterday afternoon and evening, Pro Farmer released some more data. Indiana corn yield 183.54. It's down about 5.5% from their estimate the previous year. On the soybean side, pod counts 1,318.64. That was down 4.2% from the tour last year. Moving over to Nebraska, on the corn yield side, 163.61, down 8.8% from 2025. And the pod counts 1,219.62. That's down 9.5% from the tour's average last year. So good morning, guys. Dustin, a little stronger overnight. Feels like, we're kind of chopping around here a little bit, looking at these numbers, kind of gathering what everything means. Maybe give us a few thoughts here this morning to kick us off, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, the market's acting really good. I mean, I kind of put it in the letter last night. Like, if you just look at the bean chart and don't think about any of the fundamentals that are kind of being discussed behind it, it is continuing to make a series of higher highs and higher lows along the way. So, I think this is an interesting interesting week with the PF Tour going on. Everyone's kind of hanging on to every little tweet that comes out. And if we're in a bit of an uptrend here, and we still have some big uncertainty in the outside markets, especially what's going on in Black Sea and Iran. I think that's really supporting a lot of the short covering that we're seeing. And I'd really be curious to see what this next managed money report says on Friday of what the funds are doing. For me, I still look at okay, why are we buying the market? Are we buying it because we're going to have, this demand rerouted from Europe and the Black Sea region in the short run? Or are we looking at a much lower production? Is that what the market's trading? Or is it something a little bit longer term where, commodity inflation stories are kind of happening? Look at gold today, look at what's happening. They're trying to get the long end of the curve of interest rates back down again. If it's a commodity inflation story, it may not necessarily be that we have a shortage in the short run, is my thought, right? D's 26 corn moving towards $5. D's 27 corn is only 12 cents above that. I actually think that there's a chance that for U.S. growers, the risk may start to come into how much do you have covered for this year? Because we're gonna be knocking on the door of harvest here very soon, and all of a sudden a number of bushels are going to be available. And we supposedly have a 2 billion bushel carry-in. So I would just kind of take that in heart. For our customer base, look at the letter last night, kind of talking about ways that we're starting to look at maybe, with a defined risk approach, trying to protect the front end of the market here, especially if you've got harvest bushels that are unpriced that you need to move here in the next 60 days. Just want to really think about what that risk looks like when you ultimately have to move that bushel.
Ben, what's on your mind this morning?
I think we're a couple things. We've thrown an awful lot at this corn market in the last, 6 weeks. And I think we're in a place where the market's saying you're going to have to prove the crop. Starting with a lower yield month over month from July to August. And now seeing some Pro Farmer crop tour data that probably shows it a little bit lower than that. And the market's saying prove it. And to Dustin's point, in call it what, 30 days or so, 20 days in some places, we'll start to prove it and or not prove it, right? Disprove it. So either way, there's a lot of supply that's coming to the market. Spreads don't scream tightness, at least in the 26 crop. So I do think there's some room to correct here if we get out there and we find that things are at least as good as what we're hearing and potentially better. So I think we're just in a weird period here of saying prove it. And ultimately, there's, you're starting to get a pretty wide range of yield potential. So I think volatility kind of remains the name of the game.
Jace, what's your thoughts on this market?
I think Dustin put it right. You look at the spreads, you look at the price action, and I'm skeptical that we're going to be able to sustain a rally going into harvest. I hope we do, but we've gotten a ton of rain. I've heard too much rain, is bad, which in certain areas it is, right? But when you zoom out and you look at the coverage across the belt through August, and and you think about a healthy crop that has a bunch of rain and grain fill and pod fill, that should correlate to really good yield. So I think from what people are talking about and getting all bulled up on yield, my gut says that they're going to be a surprise the other way, that yield outperforms in corn and beans by the end. So I'm skeptical, and we're going into harvest. So I hope I'm wrong. I hope this rally keeps going. But the whole curve of the corn market, look at the spreads. We're trying to drop this national yield dramatically. I don't know if dramatically is the right word, but depending on who you talk to, it's a 181 on its way to 177 or 76 or, whatever the bulls are trying to sell you. The corn market doesn't tell me that, it seems like if you look at sub-D spreads, if you look at D's July going into, there's plenty of carry where this market doesn't seem like it wants to invert, and I think the kind of Dustin's point, right? Like the risk of all these other external factors to drive the corn market higher, I could see. But I do think there's a large supply, and I think the market is trying to tell you if there is a large supply, we need big carries. We need people to hold, to store that corn and carry it, into the spring and not just move it at harvest. So like I said, I think the crop is going to be good and maybe even surprised on the other side of a better than expected from what we're trading right now. So we'll see.
Justin, want to wrap up grains here for us this morning?
Sure. Yeah, I don't know. I every year I try to figure out, or every day I guess, try to figure out what I think the market's trading, and I don't know. As far as yield, I think we went through June probably trading a decent amount above trendline yield. I think we traded all that. We traded mid 180s in corn, and now I don't know what we're trading. I think the first reaction to the government number of 180 was kind of poo-pooed a little bit. So we had that kind of break after the report. And now I think there's doubt, there's enough doubt personally in the yield outlook that we're getting some buying, and personally doesn't feel like the farmer wants to sell much more at this stage until they have a little more confidence. So definitely some FOMO going on. Some, everyone's, seen plenty of pictures of a bad field or a bad area. I tend to agree that, overall, when you get a lot of precip in August, it's good for the crops. Really bad for some areas for sure, but overall a net positive. I just don't know how you quantify that right now. So I don't think you can come in and just say we definitely have to go lower. For sure, I don't see that argument. I think I tend to agree. I think it's the work's being done in the spreads. I think the spreads are telling the story on supply. But if you look, call it March forward, we are kind of inverting. There's been a lot of buying in March, July. So you're seeing, call it Sep through March timeframe widening, while March forward is strengthening. So I think the market's telling two different stories. One, that we have a lot of supply. We're going to have a lot of supply September 1st through December 1st through March 1st. And then there's uncertainty. So I think it's kind of telling two different stories personally. And I think we're battling these levels right here because we're, Dustin's pointed out plenty of times, like there's going to be a lot of good crops out there, and you have to get even a 178 is a really good yield.
It's a big yield
historically. So I'm trying to be pretty open-minded here. Like, I don't want to just say, I don't want to be the guy that is the guy I usually make fun of, which knows the national yield. I don't. So if you look at, it's interesting. If you look at to date, August, I think we're the number one ranking in the heart of from Ohio through Iowa, one of the top 1 or 2 years ever for precipitation through the month of August so far. So what does that mean? I personally think it's going to be overall a pretty good result, but I don't know. It's the number one, right? So there's a first for, first time for everything, I guess. But I go back to what Dustin and Jason said earlier, which is, so what? We're at these prices. We're on a big rally going in harvest. Like, what do you want to do with it? I think no matter what I say, always kind of distill it down to that is like, here we are. This is what you can do today. You should have your own yield kind of figured out at this point, or at least a pretty good range. What do you want to do with it? Luckily this is happening this time of year with crop, like I said, with crop insurance still fully in effect. A lot of people have really high crop insurance policies. So you paid up and you got a big discount from the government to pay up for a lot of insured bushels. And you have a big market rally. So to me, that gives you a lot of opportunity to trade around it, to get the position on you want, to take the, proper amount of risk on. I think this is a overall very great development, so try not to squander it.
Yeah. Very good. Let's move quickly here over to livestock. Ryland box beef stealing the show in the cattle market, certainly ahead of cattle on feed later this week. And hogs continue to get uglier. So why don't you share a few thoughts this morning?
Yeah, well, it seems like you got to tell the futures that the beef market's rallying, because we just quash every single rally we've seen over the past 2 days. We have these really strong gains kind of right out of the gate. There was a little bit of optimism here from Fort Morgan kind of reaching the deal with Cargill to fire back up, and sounds like that's going to be up and running in the next several weeks here. Obviously it's going to be a slow rollout, so I think just the headline itself kind of grabbed people, but then the reality of the situation is the timeline's a little bit more extended than one would think. So I think that gets kind of up and rolling over the next month. But yeah, beef choice up almost $12 yesterday, select up too. You got new highs for the move. We're up $20 over the past 5 days. So the beef market's really staying strong. And I think the question is, are we going to see that bleed in the cash market? So far, we really haven't. We've seen a little bit of light sales in the north, 226. So that'd be about $2 lower, and 359 for dressed. So we're just not really seeing it on the cash side. So there's still a lot of caution here, I think, overall. In this marketplace. Usually we see that kind of move in the beef, and the futures are pretty quick to follow, but we're not seeing it this time around. So overall, it just seems like packers are really trying as hard as they can to get cattle as cheap as they can right now and flip that beef pretty quickly. But this was the seasonal that we were talking about, right? You get into August 1 and beef market typically really starts to go. And then after this time period, once we're kind of past the Labor Day demand, it falls back. So I think there's just not a lot of
not a huge rush for anybody to get too friendly right now, even though we're on a pretty substantial break in futures. So we'll see how cash shapes up. But right now, I think the most optimistic outlook right now is pretty much for steady if we can see it. So we'll see if that comes to fruition. And on the hog side of things, October just falling, nearly testing contract lows. We got contract lows in every other contract month before. So it just feels like the trend is your friend at this point. We're seeing a lot of new selling, open interest up 3,000 contracts yesterday. So once again, you typically see a little bit of a spike in post Labor Day demand once those retailers start to restock, but that's still a couple weeks out now. And at this point, we're just not seeing a lot of movement in the carcass in general. I mean, cash prices were revised higher yesterday, a $1.75 to 94.37, but still we're seeing that index price pretty much straight down for 9 days. We're just not seeing some support in the market that we would see it. Now we're kind of past. It feels like we're past kind of peak seasonal demand here, and we're still just kind of pricing in what happens in the third and fourth quarters of this year. So overall, it just feels like still a lot of negative sentiment here and potentially more downside to come. So we'll see if that comes to fruition.
Appreciate the update there, right? Just came into the open here. We got December corn up 4 now at 492. September soybeans are up 12 and a quarter at 12.13, and September Chicago wheat is up 4 at 668 and a half. Tomorrow morning's Thursday. We'll get weekly export sales out at 7:30 Central. Visit about those there in the War Room. Also, link is in the description, but check out the War Room report. We reference it quite a bit here. Access to premium content, reactions to USDA reports, and just an overall deeper dive into everything that we discuss here daily on the War Room. So check that out. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course puts on our national scholarship competition every year. We give away 5 very deserving college students some significant scholarship dollars. So check out the foundation. If you'd like to support, give us a call. We'd love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.